Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe, the weekend edition for Sunday, the 6th of October. Starting off with the FTSE 100, which seems to be managing to stay above, at and above that uptrend line there from the end of January. That's now around 82.40 and the 50-day moving average just above it. That's a sort of double line of support there, and obviously at the moment it looks as though we're going to hold that line, but what tends to happen in various situations is the market will give the impression that it's holding on to a line, and then all of a sudden the rug is pulled. If it is pulled, we've got 81.65 as the initial support, and then the worst case, if everything goes completely pear-shaped, down towards the 8,000 area and the 200-day line, as well as the floor of that falling red May trend channel. But to the moment, sticking to what's there on the chart rather than trying to anticipate too much, and waiting for potentially an end-of-day close above 83.60, which would take the market higher while we remain above 82.40. Onto the DAX, and here we have bounced after a gap-fill rebound. The gap from the latter part of September, the level there around 18,900, and above that looking for this market to retest the best levels ever and also head towards the top of the rising trend channel. The one-year trend channel currently up to 20,100, perhaps by the end of this month. RSI at 57, so in the box seat in terms of going up, and we've had 3 or 4 dips now, or bounces for the RSI above neutral 50, which tends to be a decent positive consolidation signal. Onto the Dow, and here the market managed to deliver a decent end to the week. We've had a double bounce off recent support around 41,800. We were allowing for a dip down to 41,500, but so far our bluff has not been called. Top of the channel there, 43,100, looking for that by the end of October. Obviously, it's rather unusual to have a positive October these days or in these years, but so far we've managed to do that. On to Bitcoin, which has not been a great market, but at least we've got the consolation that this market's bounced off the 50-day line, 60,200, which was a possible scenario there while we're above that, looking for the big break of 67,800 and the top of that falling trend channel that we've had on the daily chart from basically the end of February. Below the 50-day line, there's the risk of the next level down, 57,500. And we are hoping that we might get away with it, given the way that the RSI is now back above the neutral 50 level, only marginally though. Moving on to gold, and here you can see that even though the candles are red, we're still above or within that rising trend channel, the steeper one, the red one there from the end of June. While we're above that, and the level there is around 2050. Looking for potentially a move to 2880 by the end of next month. The key here is obviously breaking through the previous resistance, the record level there at around 2708 intraday. The next market, is just give it a little look now that we've got all that chaos and war, well, sort of more widespread war in the Middle East. Looking at crude oil, where basically did seem to be a bit too weak for itself, given the geopolitical backdrop in September. Obviously, that's got worse now in October, but top of the channel there up to 81.50, and that's at the moment the most we're looking for. Still not really believing that this market will rally in the way that it did, perhaps in the old days of the pandemic, etc. But the low 80s is what we're looking for while we're above the 50-day line, and recent neckline resistance of 72.40, but just taking the view here that this is an intermediate rally rather than a big one, but we shall see. Moving on to the stocks, and one of the good signs that you can have with a stock that raises money, or a company that raises money, is that the share price goes up after it, and we've had that with Bezant. Here we've broken one of our initial targets there around 0.03, and above that looking for 0.045. Perhaps by the end of next month, and hoping this is the final breakout for the shares after the consolidation that we've had basically for the best part of a year. Eurasia's next, and always a pleasure to look at the chart, given that there's a lot of bearish name calling about the company. Here we're back above, or we closed above the 50-day line for the first time in a long time, basically nearly a month since the shares came back to market, and 2.2 pence the position of the 50-day line, looking for a move to the top of the range around 3.3, 3.4 pence, perhaps by the end of next month. First class metals also worth a look at the moment, given how hard the company is trying to sort itself out. Here we've got a bit of a W-shaped turnaround. We've got a falling wedge there, the top of the wedge there, around 2.2 pence, and looking for an end-of-day close above that to give us a rally towards the 200-day moving average at around 3.4 pence sometime over the next month. But the key here is not making any fresh lows below 1.6 pence. Making a debut is 80 Mile here, where I haven't looked at the stock before, or at least not with its present name. Here you can see we've got a falling wedge situation below the 50-day line at 0.32. End of day close above that, and we're looking for the shares to head back to 0.4 pence, hopefully over the next month. Nice RSI configuration as well, with an uptrend line in the RSI window, which is long dated back from the April period. Ideally, obviously, no break back below the uptrend line in the price window at 0.28. Moving on to Georgina Energy, and here looks like we're on our way. We bounced off a rising 50-day moving average. The RSI now pushing above the 50 level for the first time, I think, since the shares came to market, which is quite an achievement. And looking for a break of 11.2 pence, we can get that looking for up to 13.5 pence by the end of this month. So Georgina finally back on track after the slightly sinister rug pull that there was for the shares back in August. Good Energy is next. Don't really look at this very much, but it looks as though there is something positive going on there with the nice flourish at the end of the week. The initial target here above the 200-day line at £2.77 is up to £3.30, which we're looking for maybe as soon as the end of this month. Ideally, obviously, we stay above recent resistance at £2.70. Moving along to Global Petroleum, which has been one of the stars of the year. More vertical move, basically, after a slightly slow start and one or two false dawns, but we closed above one of our best case scenario targets. I think the third one there at 0.28, and the longer we stay above that, the greater the chance of move to 0.4 pence, maybe as soon as the end of this month, given that we managed to get halfway there during Friday's session. But the key here, I suppose, is now staying above the support of Friday around 0.24. Next one is IQE, which I couldn't resist looking at, and here you can see why. We've got this bear trap island reversal, so gapping down in September and gapping up now, so that's not, and we've also got a U-shaped turnaround, so looking for the shares to at least fill the gap up to 23 pence over the next few sessions and hit the top of that falling trend channel. After that, we can take a view. Next up is Landore, which is bubbling up quite nicely at the moment, bouncing off a falling 50-day line at 3.6 pence, but looking for up to 6 pence by the end of next month at the top of that rising trend channel base from back in December. The only problem with this stock is that it tends to get the sellers coming in anywhere over the 5 pence level, but that allows us to at least head up to 5 pence initially on that situation. The star of the show, at least in terms of the summer, has been mobile streams, and here you can see the shares hitting all the targets. There's been 5 or 6 of them, and the latest one was around 0.33. Above that, we're looking for 0.4 pence, which was resistance on the way down back in 2022. What a fantastic performance there, and an indication of what happens or what can happen when the market doesn't fear that you're going to raise money anytime soon. Moving on to Pantheon, and here, first time above the 50-day line since June, which might mean something. Might only mean that the shares have been marked up just because of the oil price going up, but at least with that push above the 50-day moving average, we're looking for the shares to hit the top of that rising trend channel base at 21 pence, perhaps by the end of this month. Another recent listing, which seems to be on the front foot, is Rome Resources. Nice end to the week, and looking for the shares to break 0.26 pence, the falling trend channel that they've had since the end of July. If we can do that, then we're looking for a return to 0.3 pence, which was the August resistance for the stock. So it's the first signs of a turnaround there. Waiting for the RSI to get above neutral 50 versus 47 at the moment. Gushing article in the Investors Chronicle this week about Raspberry Pi choosing the wonderful London stock market, but at least at the moment we've got, we had positive response to that. Rising trend channel base here, based at around £3.40. Looking for the shares to hit £4.50 by the end of next month, depending on what noises the company makes regarding near-term growth. But it looks as though at least the £4 area is locked in after the key reversal to the upside on Friday. Next up is United Oil and Gas, and here still gives the impression that something positive is going on here. W-shaped rebound, breaking neckline resistance on Friday at 0.17. Above that, we're looking at the top of the triangle there from May, as high as 0.24 by the end of this month. And obviously that another company which is getting a bit of the oil spike help. Another one as well is UK Oil and Gas, and here possibility of rising trend channel base heading towards 007. Currently we've got support there at 0.03 pence. Initially wanting to break that sharply rising 50-day line just under 0.05, but the key here, holding that uptrend line there from back in July. Next up, stock, which I don't think I've ever looked at, but just too good to resist here with a massive bear trap island reversal on Watches of Switzerland daily chart. Gap down in January and then obviously gapped up back in May, but we've had another very strong gap up through a falling 200-day moving average. Suggests that something's going on there. Above £4.50, we're looking for the shares to head up as high as £6.50 in the top of that rising trend channel by the end of the year or even sooner. Finishing off with Zenith Energy, where there seems to be good developments on the litigation front, as witnessed by the RNSs this week. Just about to break that falling wedge there at 1.5 pence. Above that, looking for up to 2.25 pence by the end of next month, and ideally we stay above the 50-day line there at 1.3 pence. The other thing to notice is that we've also had a bear trap island reversal, so gapping down in August and gapping up for October. That's it for me today. More updates during the course of the week.